Morning, everyone. It's Tuesday morning, the 11th, and this is video number 753. I'm going to make it short and sweet because there's not a lot of specific information, but there is some really horrendous market action. Apple App Store UK class action, the stock is down 2%. Doesn't have anything to do with that whatsoever. It's all of the big name stocks. It's the ARC innovation stocks, Tesla, Teladoc, Roku, and Square. It's the FANG stocks, particularly Apple, Microsoft, Google, and Amazon. And it's a horrendous news background. Asia and Europe are both down. The small business optimism was very negative. The comments were 44% of jobs available went unfilled. At 10 o'clock this morning, we have the JOLTS, which is the job openings. And I'm assuming that there'll be plenty of jobs around and nobody to fill them. As it relates to the cyberware attack, the first domino to fall in that, other than the rise in the price of fuel yesterday, is that American Airlines is now adding fuel stops to several of their flights. Yesterday, with the news of the pipeline shutdown, which delivers jet fuel, American was 22 unchanged. This morning it's 21 and a quarter down, about 2.75%. Roblox had great earnings. The stock was down 390 to 64, 5.75%, and this morning it's basically unchanged. Space, Virgin Galactic. People are fed up with companies that don't earn money, and their patience is wearing thin. The stock, which is down from 62 as recently as February, closed 17.95 last night, down $1.66, and after the move today, I saw it trade below 14, but the last is 14 down $2.30, or another 14%. So you have a stock from 62 to 14. That's pretty big. Futures are down again. I would call it sharply, but really at these levels, down 268 in the Dow is not a particularly sharp move. 260 down in the NASDAQ, however, is, and the S&P and Russell have the dubious distinction of both being down 52. Yesterday, after being up on the day, the S&P closed down 44, and after a really horrendous day, the Russell closed down 58 or 2.6. We're going to add another 52 to it. So that's 110 points in basically 24 hours of trading, and we haven't even opened yet. So maybe it bounces, maybe it doesn't. Inflation and rates are clearly the issue. Stan Druckenmiller, highly respected. In fact, I kind of like him. Was on CNBC for an hour this morning talking about the fact that at its current rate, the interest on the massive debt that we are accumulating and continuing to accumulate will run to 30% of GDP. That's not debt 30%, that's interest payments alone 30%. That is a devastating and unsustainable number. It will mean rampant inflation, and it will also mean a lowered standard of living, and because of higher prices and a lower dollar. Okay, the gold is basically unchanged, silver the same. They both reversed yesterday but came back a little. The bonds are down 11. I wrote last week, and I wrote on Sunday that rates have, actually 2 weeks ago, that rates have bottomed. This is a turn. Uh, Rates tend to run in massive cycles. The last bull market in bonds lowering of rates started in 1980 and ran 40 years. We had a blow off top with the pandemic, and we have had a series of lower highs and lower lows. That continues. I said on Friday morning that it was a gift that we had those terrible jobs numbers, because the bonds rallied up over 2.5 points, back up to the 160 area, and just collapsed, closed down on the day on Friday. This is the weekly. Let me show you the daily. And we are about to break back to the downside yet again. In fact, we've broken the uptrend line. The only thing that we haven't broken are these closes around 157.06 and 157.08. So this is not a good setup. I think Druckenmiller's comments this morning on historical retail sales are very impressive. I'm sure you can get it on CNBC on a clip of it. I'm sure it will show up on YouTube. I will look for it and post it in the Discord room and through WhatsApp. Um, Conspicuous consumption. I'm not saying that people aren't going to spend money and that the reopening trade doesn't work, but it's not working the way that it has up until now. A great deal has been pulled forward with optimism. Now we will see what some solid pessimism looks like. And I think it's right around the corner. Tomorrow we have CPI, so that'll give us another look on inflation. All right, everyone. Sorry for the bad news, but it is what it is. I'll be back later.